Now, traders at Axis Bank say investors are cherry-picking high-yielding instruments with renewed buy interest on the 2031 and 2033 bonds. Meanwhile, data from the Debt Management Office shows federal government bonds, that's the Nigeria bonds, accounted for 79.8% of the total domestic debt stock, which stood at 74.89 trillion naira in the first quarter of this year. Odinaka Linus-Nwokonkwo, Treasury Team Member at Axis Bank, joins me now for more market movements. Odinaka, thanks a lot for joining us on the show today. Before we take a look at how investors are cherry-picking high-yielding instruments at this moment, I just want us to walk through the data we have here from the Debt Management Office, where we are seeing the bulk of domestic debt stock being comprised of bonds, accounted for about 79% thereabouts. Your take around these numbers in the first quarter of this year.
Hi, David. Always nice to have this engagement with you. So when you look at that report, it says 80% of the outstanding debt stock is in bonds. So DMO has successfully tried to push their obligations into a long term. About 16% is on treasury bills. We also have the about 1.4 trillion promissory notes. Also, mind you, the 79% of the bond composition comprises the euro bond, which is also about 1.4 trillion. When you convert that to naira. You also see the ways and means. It was clearly stated there that the 22 trillion ways and means is also included in that report. So bringing the total debt stock to 74. And this is in line with what we see in the market. We've seen bond appetite improve over the years. Remember, this year we had a rate of about 22% handle on the 2035, and now we are already around 18%. So that's to tell you the rally that has happened within the last, will I say, 4 months, owing to strong investors' appetite for bond instruments.
And Odinaka, moving forward now, the market is also still awaiting the latest auction calendar release. But let's talk about trading action, the highlights of the week. Yes, it's still early in the month of July, but how investors' interest shaping market sentiment at this moment?
Yeah, so what you see today, the bank started the two-way quote system. That was yesterday, and we've seen massive traction. So it has improved the liquidity in the market. You see price discovery. Instruments are being seen, prices are being seen as at when, once you request for quote, you're able to be, you will be shown prices from any bank. So that has improved a lot of price discovery in the market. Yes, the next auction, NTB calendar is not yet out, but we suspect the next NTB auction to be next week because we have a maturity on that day, I think on 7 July. So until the DMO rolls out its borrowing plan for the quarter, on the shorter end basis, we'll be able to comment further on the appetite. But one thing is clear, the DMO stance on borrowing at reduced cost is very clear, and we could see it both in the successive previous NTB auctions and also in the bond auction.
And how much of stability should we also expect this month of July when we're looking at FX movements?
Generally, if you look at what's happening across the world, SSA instruments for SSAs are gaining traction, especially when you look at the expectation of rate cut by Powell in the US. So almost all SSAs instruments have been green. We've seen the euro bonds gain about $4 to $5 over the past 3 weeks, and that's also both the Angola, Nigeria, Egypt, almost all the SSAs have gained, and this is also reflected in the FX market that we are seeing. We see FPIs kind of bringing in flows, so we've seen massive appreciation. We're around 15.24 as of today on the average.
Well, Odinaka, would have to leave the conversation here for now. Thank you so much for the updates. That was Treasury Team Member at Axis Bank, Odinaka Linus-Nwokonkwo, with the updates there.